the bank reconciliation statement, we mentioned that there is possibilities sometimes at the end of the bank reconciliation statement. Normally we do end of the month because there is possibility that there is some differences between the balance we have in our records and the balance is available in the bank statement. So normally we do the bank reconciliation to see to make sure that we are moving in the right track with the bank account. So why is important? Because as we mentioned many times, we have differences between the statement or the balance recorded in our books and the bank statement. So we explain about those main reasons, main three reasons may causes differences. First reason, we mentioned the transaction has been recorded in the cash book but not yet recorded in the bank statement. Second, the transaction have been recorded in the bank statement but not yet recorded in the cash book. And third, there is bookkeeping errors. So when we will talk about first type, which is transaction have been recorded in the cash book but not recorded in the bank statement, we take some examples. Let's say a transaction that have been credited, which means the money taken out from your bank account but not yet taken out from the bank in your documents but not yet taken out in the bank document. As example, unpresented check, like you give a check to your supplier, you already recorded that this money should be already gone out from your bank account, but your supplier didn't go and request for the money. So it means the bank statement doesn't know, or the bank doesn't know that the money being taken the money is not yet taken out from the bank. So this is one of the examples. Also, uncredited check, which means that the transaction that have been debited in the cash book but have not been credited in the bank statement. Uncredited check means you receive check from your customer, but you put it in the bank to get the money, but not yet the money banked in your bank account, because you know when you receive any check and you want to get the money, it will take a few days to happen. So maybe these things, it's been recorded in your cash book or in your records by end of the month, so it will take another few days to be recorded in the bank statement. So for that, it will not show up in this bank statement, but it's going to show up in the next bank statement. The other second type we talk about is a transaction recorded in the bank but not recorded in your system. As example, receipt by the bank on behalf of its clients, like some interest, like some dividend, like cash credit from debtors, which they pay directly to the bank. We have also the second type, which is transaction being cut from your bank account, which are like the debit side, which means the money get out from your bank account but you don't know about it yet. As example, like charges for some services by the bank, standing orders, and so on, direct debts, and dishonest checks. Dishonest checks, we explain about it, as it's sometimes after the bank receive the check and consider the check okay and put the money in your account, then suddenly after checking notice that this check is bad, should be rejected. So again, they will deduct this money from your account, so it will take time to be managed. So the third type of the errors, it will be bookkeeping errors, which means you record something wrong in your book. Normally, the bookkeeping errors, it will be happening by the company, because rarely to be happening by the bank. So errors in the cash book and or the bank statement. What are the types? Misstatement in the cash book. Example, a check to the amount of 563 issued may have wrongly recorded as 356. Is very normal. Like you change the number, so instead of like 563, it will be 356. So this one is also one of the things. Another example, details in the bank statement may have been wrongly stated, like 50 ringgit check paid by the bank is wrongly stated as 500. Bank has dated Abdul Samad account instead of Abdul Samad account. Sometimes the name of the person is different. This is actually unusual to happen. So mostly when we have error, normally it's happening in the company itself, in the company records, because it's very rarely to happen any error in the bank, because we know the bank has many layers of auditing of each and single transaction they are doing. So it's very rarely to notice that there is a mistake in the bank record.